Morning traders, and this is your Dow Jones day trade setup for today. So lots of warning bells on the charts for me this morning. I actually think I'm probably going to just sit on the sidelines. There's nothing really that is standing out for me at the moment. So let's just go through the daily quickly on the Dow Jones. So we've had a pretty good rally, and then we've got this exhaustion bar last week Thursday. Then Friday we had profit taking come in and drove it down. Now we've had a gap down, and it's looking at this stage, which is, I know it's still too early, but if this closes up kind of in that area there as a green bar, that's a piercing pattern for a continuation to the upside. Okay, V reversals are very rare, so this is a V reversal right now. I really would expect a second move to the downside, and I'm not sure when it's going to come. It could turn out to be a V reversal, but as I say, they're extremely rare and far and few between. So for me, the higher probability is a move to the downside to come and test either the lows or some kind of Fibonacci pullback. And sorry, the last thing on the daily as well is my oscillators are agreeing with that scenario at the moment. So when they're far apart like this, there's normally a fairly violent move to the downside. You can see they're far apart, and then we've got a pretty strong move to the upside. Okay, so looking at the 3 hour, everything's reversed. Oscillators are telling me that's a nonsense idea, and we should be looking for a move to the upside. And the most logical move to the upside at the moment, bearing in mind I have diversions here. If you look at the black line, so there's low, lower low, low, higher low. So that's divergence, continuation divergence to the upside. So my 3 hour is saying more than likely a second move up, something like that, which gives me the 200 EMA. It does close the gap quite substantially, but then it also tests. Let's just go to the daily for this one. And you'll see quite some way back, pretty much here. You can see this area where the buyers were stepping in. Okay, so not quite exact, but you can pretty much tag. And one more. Okay, see what I'm doing? I'm just putting lines on these fractal levels. If we come back here, you'll see that's the zone that we want to be in on. Okay, so this is still target area for me. I still think we're going to be rallying up to this area. It's when we get to this area of 23,600 area, 23,623 and 23,160. So between 23,160 and 23,600, that's the area that I'd be starting to look for opportunities to get in short again. Okay, so if you look at the hour, we've had a grouping, we're pointing up. Also a little bit of diversion on the hour from the low, lower low, low, higher low. So yeah, this does look like a bit of a flag break that's going to happen to the upside. And I'll wait for European Open for that one to confirm it. I'm not going to try to chase it this early. We'll wait for the European Open and see what transpires. Right now, my bias is to the upside, and the stop area is below the low of today right now. Okay, obviously I want to see some structure. So the structure for me would be something like a break of this trend line, a pullback, a retest of it, cross over the moving averages, and then we move the upside. And you'll do that on like a 12 or 15 minute chart. Okay, so here you can see a test of the 200, and then we've got a close of the 200 EMA. But you can see how strong this diagonal trend line is. Look what happened there. And I would expect some selling to come in and probably hover around here. If we do break and retest, then you'll be looking for a decent area to get in where you can actually put your stop. And at this stage, I wouldn't want to get in with a chart looking like this, with oscillators like that. So I want to see either some sideways motion or some kind of structure forming and a break of that structure, then you can get in with a very tight stop. Okay, so for me, slight bias to the upside could also just turn out to be a range, so just be wary of that. So in other words, we could just come right the way back to, let's use that level, right back to the highs of Thursday, and then bounce back down, and then only go through. So in other words, get a break of this trend line up to the highs of Thursday, and then start moving down, come all the way down to test this, basically forming a range, and then push to the upside. Okay, so I think I'm still biased to the upside, pretty much to come and tag these areas before we see what's happening. And then the last thing I want to just point out is if you look at the weekly, that is an extremely bullish signal. Okay, that is a piercing pattern of note on the weekly. So based on what you see here, and you can see why we're hovering here, is because we've got a previous weekly low here, which is what we're playing with. So we get above it and we find support on this level of 21,632. That's going to be the area to be buying off. Okay, especially if we get a close above there on the daily. That'll give us some will give the bulls some confidence, basically, that they can drive this thing back up. I don't know whether it's going to get all the way back to the top, not in the short term, but definitely some kind of a technical rebound here up until possibly the 200 EMA, or possibly even that second gap there, which is another serious breakout level before another moves to the downside. Okay, so anyway, guys, that's that kind of my structure today. Looking to trade this up for those levels I gave you, and based on that, we'll wait and see what happens at those levels before probably nibbling at a short or two to see what's going to transpire. And if I just come down to a lower time frame just to see where that 200 EMA is, pretty far up. It's pretty far up, so it's not something that I'd be looking at 3,000 points up. Not something I'd be looking up at the short term. So wait for it to pull back, get some structure, and then get in for that trade again. Anyway, I hope that helps, and we'll catch you later. Cheers for now.